Good afternoon, everybody. Good Friday afternoon. It is awesome to be down on the floor today. It is actually jumping a little bit for a Friday in the summertime here. There's a lot of activity. You'll probably be able to hear some of the action going on here. Uh, Vol is up a little bit. Maybe there's a little bit of hesitancy going into President Trump and Putin's meeting later on today. So maybe a little bit of risk off here. But it's jumping down here, and you can't hear it in here, but those of you that were in my room earlier, you heard I had the mic turned up loud, and yes, the Blue Angels and F-16s are flying overhead because they are all practicing for the Air and Water Show. And our office here at the Board of Trade, we overlook Lake Michigan, so it is awesome. But all that being aside here, today, as you all know, we are bringing in someone unbelievably important and influential in this sector, in this marketplace, and specifically for the CBOE. So, without any further ado, I want to bring in Mr. Henry Schwartz, everybody. It is really a great honor to have Henry with us today. And Henry, you want to give? I have it here on a slide here, but it's way better if you just let everybody know a little bit about your background here and why you actually mean so much, not just to the CBOE, but the entire industry.
Well, thank you, Scott. That's very nice of you to say. I love this industry, and I love going to work every day. I started in the business actually on the CBOE floor as a runner in the late '80s. So this is kind of made a big circle, but I was a market maker. I worked for a few different banks in New York, and then about after Bank of America, I started a market data company called Trade Alert, which was focused on option analytics and really with kind of putting context around the trading activity. And the time we started, there were only 5 exchanges, and we were just starting to see the beginning of kind of true fragmentation. And we did a lot of really innovative things like assembling complex orders into the spreads that they are, and it just added a lot of transparency for the market participants, whether they were individual traders or brokers or banks. So, and now CBOE acquired us in 2020. I've been here for almost 5 years now, and I'm on the market intelligence team. So my actual job is looking at the market activity and putting out content and basically trying to help market participants understand our products and also what's going on. So I'm happy to be here.
Awesome. That is quite a background. And again, everybody, I can't emphasize enough how much Henry means to the CBOE and the industry. I mean, if there's anything you want to know about analytics, about volumes, about what is, what the state of the markets are, Henry is the guy you want to talk to. And, CBOE just came out a couple weeks ago with their second quarter results. They had a nice big earnings presentation. We're not going to go through it line by line here. You can read that all online. But option volume continues to rise, continues to soar. We are at all-time record highs here. So, Henry, if you want to give us a little bit of an overview of what's on the screen here, and then we'll really dive into what's trading, back here in the S&P and especially zero-dated options.
Sure. So I mean, state of the industry is one of the presentations I've actually done it at the options conference for about the last 7 or 8 years now. Maybe it's more than that. But really, at the highest level, looking at option activity, right? We always start with volume because it is the easiest thing to look at. But we're averaging this year about 57 million contracts a day. That's 20% above last year. The zero DTE really is kind of powering a lot of the growth. Okay, so the zero DTE options, we know they're not actually zero DTE when they're listed. They're listed when they're a month out. They're basically daily options, but we see all that activity on the final trading day. And in SPX, which is really the dominant product for this kind of trading, the final day, the zero DTE activity is about 62, 63% of the daily volume in SPX. So, that's kind of out. It's unbelievable, really. I mean,
It's crazy because when this thing first came out, and I know, you were just, big part of bringing this to market. When this thing first came out, everyone's like, you know what, we'll see what it's like. And, is it going to work? And lo and behold.
Well, I mean, it's exactly it. I honestly don't. I was not involved in the decision to add in the Tuesday, Thursdays, which we did in April of 2022, and that really seemed to kind of, it completed the 5-day a week potential to trade, and that really resonated not only with retail. Or retail really is the more than half of the activity in this zero DTE, but we also know there are all these yield ETF products.
Yep.
There's institutional users. There's I go to a lot of hedge fund dinners and things in New York, and when I traded, which was for about 20 years, trading options that have 5 or 6 hours left on them, we generally avoided that, right? Because it's very hard to manage a book
Right.
like that. The technology wasn't quite good enough to handle things that are trading that that are really close to the end of their expiration, their life. But even institutions and hedge funds are using zero DTE basically to very actively trim their delta and kind of adjust their profile. And because there's so much liquidity and so much activity, it really it just kind of has snowballed into a kind of an asset class of its own, I would almost say.
Sure is.
There's certainly a use case of its own, right? About a lot of the activity we see in SPX zero DTE is vertical condor selling. So that's different. People don't do that nearly as actively in the longer dated. So it's really the biggest growth story over the last 3 or 4 years has been it's been retail and it's been zero DTE trading. Those are really the two primary themes that we've seen, and you've been in the business for a long time too. This is the first true, like, you could say maybe there was a paradigm shift when things automated around after the turn of the century.
Yep.
But the millennium. This is different. This is basically new users coming in and applying a new kind of strategy to instruments that they're just options, right? They're not any different than 30-day, 90-day
Exactly.
options, but they are basically kind of being used for new things, which is amazing to see.
See, and you talk about this new paradigm, this new shift, and I always tell people, when they ask me over time, when you were trading on the floor, what was the biggest change you saw? And sure, the change from floor trading, market making to the screens, obviously that stands out. But when we started to list, and I believe it was back in the late 90s, weekly options, because prior to that, we only had one expiration a month. It was every, the third Thursday of every month. That was expiration. When weekly options became available, boy, we saw a surge in volume, and I thought that was great. Now you get the dailies and the zero deets, and like you said, that has now taken that to the umpteenth level, and really just shifted probably the landscape of the entire industry just because of the sheer size of how much trades. And everybody can see this chart here. You don't have to look at all the intricacies here, but literally this is 24 versus 25, just the growth in index volume, in ETF volume, stock volume, flex, which we've talked about once or twice. We can go into that at another time. And then just total volume. It's just nobody in this industry feels that it's at a top either. It is just increasing because options are a way for anybody, not just retail, but big institutions, to hedge other portfolios they may have worldwide. So, I'm not going to say we're just on the cusp of breaking out, but by no means is it slowing down at all. And, so this is kind of what Henry was talking about here. This is that paradigm shift. If you look at the change in volume here, you can see that not only overall industry volume up 20% year over year, but take a look at that second point there, short dated trading. This is unbelievable. And I personally, I dabble in zero deets a little bit, But the short dated options, weeklies, which then become dailies or become zero DTEs, we trade them all the time, every day in our
Yeah.
rooms here. And, that's because of retail just embracing that, and also on the institutional side.
Yeah, exactly. And what you see in this chart, like 2022 is the year that the short dated overtakes the longer dated. But you also can see in the bottom charts, this is primarily an ETF and index option story because as you said, there are weeklies in single stocks, but currently there's no dailies in single stocks, and so
That was going to be my next question. We'll get into.
We could talk about that for half an hour, but
exactly.
but yeah, it's once people get comfortable, the short dated options, you could basically, you can point to a few things that are very appealing about them. Some you could say, well, attention span is shrunk, and that's probably a bad thing. But really, the precision you get, I want to make a trade because I have a view for how today is going to go.
Yep.
I don't know what's going to happen next week, and given kind of the way the world is operating now,
I don't think anybody knows.
I'm nervous about what will happen over the next week. But you know what? I'm not afraid of basically putting some capital to work on a view for today. And the zero-day options let you do exactly that. And that's actually one reason. It's very interesting, right? So the zero-day option flow, if we just talk about SPX, is 1.6 million contracts a day. So it's basically about 60% of the average daily volume in there. But one thing that's really interesting on some of these crazy days, like August 4th last year and even Liberation Day this year, we actually see the zero-day activity kind of dip a little bit. So the retail tends to avoid it on days where the market's crazy, especially if they wake up and they see the futures are down 70 handles, and they said, yeah, I don't think I'm gonna trade today. And they don't have, we for the first year or two, we answered a lot of questions about our short dated zero DTE options adding systemic risk to the industry. And the answer is we don't believe it is, particularly because that August 5th is the perfect example. The market, Tokyo was down 12%, the US was looking down 4%. The zero-day traders didn't have positions on because they would have waited until Monday morning.
Sure.
So the fact that we see retail kind of sit out Fed days, or at least some of them, or change what they're up to, is one of the reasons that even though the volume is massive, the positions that are out there are really not that big, and we can see that in some of the other data sets as well.
That's great, and what you touched on, which was my next question, because everybody asks all the time, when are we going to get dailies and zero DTEs and Apple and Microsoft and NVIDIA and individual single stocks? We already have them in many ETFs, whether they're daily or 3 days a week, multiple days a week. But when are we going to start getting those in single stocks?
I mean, there's a filing that's pending. They're one of the other exchanges is trying to get them listed in basically like the top 10 single names, I believe. One thing that's kind of interesting is the filing explicitly omits earnings days, so they don't actually list them for the day that earnings are coming out.
Okay.
One thing I would say that the biggest issue with zero DTE options on things that are physically settled is after hour moves, right? And then this contrary exercise ability, which is confusing, and it's not really handled the same way from broker to broker. Different cutoff times exist. It's dangerous, basically. It happens in SPY. If somebody has an out of the money put in SPY into expiration on a daily, and the market sells off hard after 4 o'clock,
right?
They actually might get assigned. Exactly. Sure. But with the last they looked at the screen, they were out of the money. They don't expect to get assigned. Right. And that hairiness, it really throws a wrench into a lot of the strategies. It makes it hard to teach, right? Because we talk about vertical spreads have limited risk. In general, they do. Oh, except for when you get assigned on one leg and you didn't know that you were supposed to exercise your other leg. And then think about after earnings when stock whips up and all the calls are going to get exercised, and then it freaking tanks, and then everybody. So it's I think what everybody in the industry is concerned about is making sure customers have a good experience. Okay, that things don't happen that they don't understand, and the dailies in single stocks, they add a lot of complexity and challenges that way. So I don't know if we're ever going to get them or not. I would say that in some of the ETFs that they have listed Monday, Wednesday, Fridays on, we don't see the same kind of volume pickup that we do in SPX and the big ETFs, right? SPY, Qs, IWM. Those all have 0DTs that are very, very active. Some of the, once you get away from kind of these big macro tools, I'm not sure how much interest there is. The short dated options give you, they give you incredible precision about making your, setting up a trade. They also basically have built-in leverage, right? And that leverage kind of goes up to towards infinity, effectively as the day passes. And I don't know if that's, that it's not really the characteristic of options that we usually like to kind of promote, because it's just part of what an option is. But I think we need to be careful about people like basically, overusing the leverage, right? That's kind of always the issue, is people can get themselves hurt because they don't quite appreciate what leverage can do for you.
And that's kind of the bad rap that, when you see articles out there that 0DT short dated options are risky, or, it's gambling, which, that was something when I was market making, trading on the floor, someone would say to me, "Oh, all you're doing is gambling." I'm like, no. Let me explain it to you. But that's, what a lot of people will read and see about the ones that really don't understand it. But, on a side note, this is for everybody out here. How often do we talk about in our classes, in the rooms, something that Henry was just talking about? When we get to expiration, if we are close in one of our short options, okay, at expiration, even though you may think that it is expiring out of the money, you never know, A, what may happen after the market closes and after hour trading, and B, what the person at the other end of the world that owns that option, maybe they exercise that option even though it's out of the money. So what do we always talk about? Close it out, pay a penny, 2 cents, right? We don't care. Take that risk off the table, and then you eliminate that sort of exercise and assignment risk. So Henry and I did not discuss this before he came on. So
no, it's crucial. I mean, I'm sure all of the phrases that you hear growing up as a trader. One was, when in doubt, close it out, and the other one was, don't be a dick for a tick. And if it's offered at a nickel, and you know what, market closes in 20 minutes, you're like, I usually if it's down to a nickel, usually you sold it for something a pretty good chunk higher than a nickel, and like, just close it out. I mean, or look for an option that's a little closer in that might be also down to kind of those last few pennies, and buy that, and then kind of spread it off. But that doesn't quite eliminate the whole, well, geez, what would happen if the market really moved after hours? And and as I said, it's very important to understand that different brokers handle these contrary exercises differently. Some people don't find out until like Monday morning that they got assigned on something over the weekend. Some other people find out on Friday night. So like, and I don't think it's fair to make customers have to understand the intricacies of like, well, geez, if I have my account at broker X.
Yeah, that should be standard across the industry.
Yeah,
totally agree. Henry, one of the things that we do here daily, there we go, that we do daily here on Market Minds is we have a word of the day that we let everybody listening in. They put their name in here, and we give away some swag at the end of the day. So today's word of the day is CBOE. And let me be clear here, everybody. Yes, it used to be CBOE, Chicago Board Options Exchange, and a couple years ago made the transformation to CBOE now. No more CBOE. So Ralph Cramden here says CBOE. So everybody get that in here. We'll get to the wheel in a little bit. Let me just go back. We talked about 0DTs a lot here. This is some of the stuff that Henry was talking about. And you can just see, everybody, that these closer dated, near dated options now make up so much of the liquidity, so much of the volume that happens here. And I think, Henry, you alluded to this, retail traders are making up more than half of the 0DTs in the S&Ps back here. which is absolutely unbelievable. I mean, it's just crazy what has happened to this marketplace.
Yeah.
Before I let you go, and man, we just appreciate so much you being here. I mean, you bring so much to the table. Anything that we maybe want to look out for coming into the next quarter, end of the year, just on the option front, volatility front, VIX, anything that comes to mind?
I mean, I don't know if your your community pays attention to, like, there's the VIX, which is based on 30-day SPX contracts.
Yep.
There's also the VIX 1D, which is really uses the 0 and 1-day SPX cycles. And I love the VIX 1D as basically an indicator. You have to understand it because it's averaging 2 days together. It tends to go up because it's kind of using less of today and more of tomorrow, and tomorrow includes an overnight session. So it has this tendency to kind of go up and then drop, and a lot of people look at it like, I can't make any sense out of it. But the trick with it is you look at it at the same time of day. You compare the VIX 1D 10 minutes after the open. That's what I like to look at, and it effectively is the same as telling you what the straddle is priced at. Okay, you could go do the work and go, okay, I got to figure out where the at-the-money is and add the call and put together. And okay, today it's $19. Yesterday it was $17 at this time of day. So today's a little bit different. Maybe there's a number, but I really do. I love to. I've got a chart where I plot the VIX 1D on top of the straddle in percentage of spot, and it tracks perfectly. So it's a very good indicator for that. We actually have something coming which I think you'll love. And my colleague Ed Tom just did a webinar on it yesterday, which is the VIX decomposition model. And what that actually does.
I caught that yesterday morning.
it's very cool because, like, today's a perfect example. Like, VIX is flat. So does that mean that there's been no change to the volatility surface at all? It's like, well, you and I know, like, well, actually, you don't know what that VIX being unchanged doesn't mean everything's the same. Maybe the puts got steeper and the calls got a little bit cheaper and they canceled out, or vice versa. And the analysis that Ed did shows the difference between, on a VIX spike like Liberation Day versus a VIX spike like August 5th, where one's kind of a downside, holy crap, something bad is happening, and the other one is like, okay, what does the future look like? There's actually a big chance that we might get a big move to the upside. So yeah, I mean, I love, and I think it's important, the users don't need to understand the VIX formula, like, as long as they kind of get the concept. But it's a very important number. Like, it's and digging into the kind of the components of it is very, very cool. So I'm excited about that.
That's great. And I know now that my students are all going to be saying, hey, Scott, what's this VIX 1-day thing? And I'm going to have to do one of these on the VIX 1-day next week. So that is great. And what you just said about not necessarily knowing the formula, but you need to know how it works. That's what I explained to everybody about the Black-Scholes model too. You don't need to know the math, but you need to know the pieces that go into it. You need to know the ingredients and how they all interact. So unbelievable, Henry. This was fantastic. I know from the comments that I'm seeing here in the chat here, this has been incredible. Truly, truly appreciate your time. When's the next time you're in Chicago?
I'm there for a couple of days in October, maybe also September. I haven't looked recently, so.
Awesome. Well, if you're down the block at CBOE headquarters, which you probably would be, we'll catch up.
Awesome. All right, Scott. Well, thank
you. Really appreciate you. Have a great weekend, Henry.
All right. You too. Bye, buddy.
All right. Bye-bye. I'm not going anywhere, guys. Henry is out of here. That was really enlightening, especially what he was talking about with VIX 1-day. It's definitely something that we will take a look at, and just the transformation of this industry. So it is awesome. It is awesome. All right, guys, last call for the wheel. Okay, and let me get this back up here. You got about 30 seconds to get this on the wheel here. And since we started here, S&Ps have been, I'm looking up on the board here, pretty much in a really tight range. We're down about 15 points right now. I think I saw it down 19 at its low and down 12 at its high. There was, I don't know if you could hear in the background, definitely some business here, especially for a Friday in August. But this is and there we go. And it's actually a pretty full pit. So it's great to see the activity, what is going on. All right, the wheel is closed, everybody. The wheel is officially closed. I am probably out of here in just a little while. I'm gonna go enjoy outside the Blue Angels flying overhead and all the cool stuff that is going on with the Air and Water Show. If anybody has never ever seen that, you for sure, you for sure want to take a look at that. It never gets old. It is really, really exciting. All right, next week I'm still waiting on the wheel here. So next week, what can we prepare for? Eco data wise, there's not a ton. And even though we're winding down earnings season, this is the time of the cycle that the retail stocks report. So the beginning of earnings season always kicks off with the financials. The big banks, JP, Goldman Sachs, Citi, and the like. End of earnings season are all the retail stocks. So I know next week we've got Walmart, Target, and TJX, and a whole bunch of others. So should be fun trading next week. All right, guys, I've got the wheel. We're gonna do two of them today. We're gonna have a great 2-day wheel. Oh man, this thing is filled. And yes, you'll notice a change in the wheel just for today. Just for today. Gus, we actually have rooftop access here at the Board of Trade. Pretty cool outside space up there. So I think I'm going to head up there and see what it's like. All right, guys, this will be wheel number 1 for the day. Tom, Valerie, what your options are. Oh, there we go. There we go on that last little tick there. I know you are in the house still, right? And you know what I'm actually going to do, guys? I'm actually going to go to the bigs, to the higher ups at CBOE, try and get some swag from them that I can give out. All right, you are here. Awesome. Going to remove you off of here, and let's give it one more whirl here, everybody. Here we go. Number 2 for the day. All right, Dr. Ray, Dorothy, Easy. There's a new name on the wheel. Dr. Ray, are you in the house? Dr. Ray, congratulations. Are you in the house? Let's get a newbie up there. Love it. All right, Dr. Ray, come on. Don't leave us hanging. Don't leave us hanging. Are you in the house? You got to be in it to win it. Got to claim your swag here. Let us know. Is there a doctor in the house? Sometimes we ask that a lot down here. Gregory, yeah, that's not no pun intended there, right? I never even thought of that, Gregory. That's awesome. That's awesome. Uh-oh. Dr. Ray, we may have to go back to the wheel, everybody. Dr. Ray will give you 5 seconds. 5, 4, 3, 2, 1. As Gene just gave us the countdown. Glad you joined us today, Dr. Ray, but so sorry. Oh my God. What do you think, everybody? What do you think? Did Dr. Ray make it in time? That was literally at the countdown. I think Dr. Ray was seeing another patient, but heard the name. So yes, Dr. Ray, awesome. You see on the screen, there is an email address there. Please send me an email with your swag size and your mailing address. Okay. Prosper swag at prospertrading.com. All right, everybody. This is a great way to wrap up the week. We are working on bringing in more and more industry experts to join us once a week, whatever it might be. Yes, Dr. Ray, we know you are here. You won. Let me type that in here. We know you are here. Congrats. Okay. Shoot us an email there. Okay, there's something going on there. Shoot us an email there, everybody. Okay. Well, I'm going to try, Dorothy. I'm going to talk to the bigs. I'm going to talk to the folks in charge here and try and get some CBOE swag, which is really really cool stuff. Everybody, have an incredible weekend. Have a safe weekend. Aladdin, yes, the floor is humming. Have a safe weekend, everybody. All right, and I am, just so everybody knows, I am traveling Monday to bring my youngest son back to Indiana University, Kelly Business School. So I will not be on Market Minds on Monday. So we will be back on Tuesday. Market Minds is going back to school on Monday. All right, everybody, be safe. Have a great weekend. See you then.